Hey traders, Raghi here, and in tonight's video I'm going to walk you through the US dollar, Canadian dollar, and Aussie US dollar. These are two recently closed trades from a number of positions that I have open right now, but these two recently closed trades will give you a lot of insight into the trade management that allows me to minimize my risk, maximize my wins, my gains, and still manage to allow the market enough room to move so that I can give it all the room it needs within what I call the validity. So let's get into all that right now. This will be a great trade and risk management primer for those of you that are new to the way that I manage my winners. So the first up, this one is the Aussie US daily time frame, which was a 34 EMA on the low sell. So that just means this is a classic swing short for me, using the 34 period exponential moving average. Now, I mention the strategy because in the spreadsheet that I share with members, I list the pending date, the fill date, the pair, the time frame, the individual currency story or driver for the pair, the angle of the market, and the strategy, so you know specifically which strategy of the ones that I teach and use that is being employed here. So this was a 34 EMA low sell from 77.40, as you can see here on this chart. Now the 77.40 is ultimately a trend following correction entry. In other words, I was selling into a bounce, selling Australian dollar, buying US dollar, and the point of validity, the stop loss, was 78.55. Now you can see we've broken that now, but again, this trade triggered on the 18th. So when I sold 77.40, I also had a profit target. And that profit target was waiting at 76.50. You can see that this first green line right here. So 76.50 was hit, as you can see right there. In fact, 76.10 got very close, and I do believe some traders were able to execute that 76.10 as well. But I use 76.50 conservatively because I know the spread between brokers can be wide enough that some traders I know did tell me they got it and others did not. So the 76.50 profit target initiated what I call a ratchet, and that means that I no longer want to use this point of validity here. I no longer want to use this as a stop loss. I want to trail to a break even, which is just going to be right above the entry, and that break even was 77.55. Now that's 15 pips, and it's a little larger than I typically use, but it made sense because this allowed me to be on the other side above the 77.50 major psych level, and those handful of extra pips, about 10 extra pips, was worth it to try to let the selling pressure that would typically accompany a major psych level do its thing for me so that I could stay in the trade a little bit longer. So realize the arithmetic of this trade is we took 77.40 to 76.50, so that was a 90 pip profit on two lots, and then I had two more lots still open. Those two lots had a cumulative risk. Again, we talked about the break even of 15 pips, so I took 90 times 2 off the table, and then I was still risking 15 times 2. Now one of the things I say a lot in my chat room is show me your stop loss and I will show you your P&L. So, you know, basically I'm talking about 180 pips here, 30 pips here, so I'm talking about 150 pips essentially locked in with ratcheting to 77.55, and that actually got hit today and I was out. So I walked away with those 150 pips across 4 lots, and that's the Aussie US. Am I looking to get in again? Yeah, I would totally look to get in again, and that would be now, however, a distribution fade setup. Distribution fade setup. So that is what we're looking at here, and there's two levels, actually a few levels I was looking at. 78.45, 78.75, and 78.95. So those of you that are familiar with my distribution fade, we'll talk about this in the morning in terms of this trigger for those of you that are watching it and interested in taking it. All right, second trade management example, second closed trade is the U.S. dollar Canadian dollar. So again, let me walk you through it. This was another setup from the 18th, and this was what's known as a BTG 21 buy. So I'm using the 21 period exponential moving average to get an aggressive buy entry, and this was at 26.20. So this 26.20 entry long had a point of validity down to 25.90. The first profit target was 27.90, which is that red line up here, but I also had an optional profit target that I was looking to use at 27.20. So 26.20 to 27.20 was a 100 pip win. So I got 100 pips times 2. So that was a 200 pip win. Now, it's not about the 200 pips here. Forget that for a second. The important part of this is upon reaching 27.20, I moved my break even, and this was a little bit more risk again. This was a break even down at 25.95, which actually is a pretty big break even stop for me. I mean, arguably it was really more of just a stop loss based on a cheated in entry and using the 126 handle as potential support. But that's kind of a big one for me. Typically our stop losses are in the 5 pip, break even stop losses in the 5 pip realm. So this was 25 pips times 2, and again this was a potential loss then of 50 pips. So again, I knew that I'd locked in 150 pips by taking, number one, the profit target, ratcheting to a break even, which represented a loss of 50 pips. So I knew worst case scenario, I'm still walking away with 150 pips across 4 lots. So that was a nice, in total 300 pips I took off the table today. So again, I wanted to share with you a little bit of insight into my trade management. I do want to mention I still have a long position in the U.S. dollar Canadian dollar, and as I mentioned earlier, I'm open to another position in the Australian dollar US dollar. We'll talk about both those in the morning chat, and I'll see you in the next update.